welcome you to the First Time Home Buyer Seminar. It's sponsored and brought to you by Pequeño Real Estate and Vision Mortgage with Armando Barbosa. I'm going to go ahead and get started speaking about the First Time Home Buyer process and how to go through the ins and outs of our buying process, and then we're going to go ahead and transition over to what Mr. Barbosa is going to go over, which is the mortgage process and how to get qualified and all that good stuff. So you want to follow along in your sheets, and for everybody watching online, welcome as well. We're going to go ahead and be learning today about the market conditions here, specifically in San Antonio. It's always good to know, especially when you're buying in a real estate, which isn't, you can't just pack up and take it with you. The conditions that you're buying around, make sure it's a good, healthy economy. Also, the steps for buying a home, and then obviously the importance of using a realtor, and the elements of choosing a home. And then, of course, the escrow and closing process. So we'll go ahead and start with the economic outlook. If you have any questions, feel free to jot them down, and then we'll go over them at the end of the seminar. One of the good things to know is the unemployment rate. I know maybe some of you guys don't worry about that. I mean, right? You guys are employed. One of the things I want to get a feel for the audience. So I'll ask a question. Who has bought real estate before? Okay, buying real estate. Bond purchase. Yeah. Or for the first time buying? Is it anybody's first time buying or looking to buy homes? Okay. Okay, perfect. And the rest of you are here because. Anyway, so of course the unemployment rate here in San Antonio is at 3.2%, which is pretty low compared to the average of Texas as a whole, which is 4.2%. We have the employment growth here in San Antonio's been above, the average trend line for the whole United States. It's always good to know that, the economy around where you're purchasing is steady and diverse. I love San Antonio. One of the reasons is it holds, a diverse economy. We have, a lot of military employment. We have a lot of professionals, big companies like USAA. We have the medical area. We have the university systems. So all that is good to know that, we're not just depending on one industry, but that's what I kind of like to suggest when consider when you're purchasing real estate. The sales here in San Antonio is also, you'll find, is the median price for a home here is around $270,000, meaning half of the homes are under $270,000 and half of the homes are over $270,000. For those of you that are familiar with San Antonio area, you'll find that the northwest area, a little south of the northwest, you'll find that it's around $170,000. That's the average home there. If you move over to the Alamo Heights, it gets a little more pricier, around $380,000. If you move over to maybe the south side of San Antonio, you're looking around anywhere from 100 to a little lower than 100. Downtown also has around average price of $280,000. So that's always a factor, deciding where you want to go and look at what you're wanting to buy. Also, the age of buyers. You'll notice we have the median here in San Antonio is around 44, and the strongest or the highest percentage of buyers are what we call millennials, and the age is from 25 to 34. Also, the Americans say that real estate is probably the best long-term investment. The polls show that they hold it over the gold and stocks, mutual funds, things like that. Real estate is kind of more like a long-term investment that we go into. Renters looking to buy, 6 out of 10 renters poll that they plan to purchase a home in the next 2 years. Some of you folks might be renting and looking to buy. We'll go over some things to look into if you're ready to make that next move into purchasing a home. Top 5 reasons people want to purchase a home. We're looking to some of them say that they desire a better location. They might be relocating. They want to be closer to work. They might be looking for something bigger, larger homes. Obviously a place to live, and they're also tired of renting. They're tired of throwing that money down the pole. So we'll go over also who are the players in a real estate transaction. You'll see that we have the sellers, of course, the buyers, realtors, and escrow officers, mortgage loan officer like Mr. Barbosa with Vision Mortgage, and then inspectors, of course. It's always good to get a home inspection. So the major steps in the home buying process is decide whether you want to rent or buy. So renting can help, when you're not ready to buy. So after the seminar, you might think, in speaking to us, or getting, your application in and sitting down with myself or Mr. Barbosa and seeing the status of your current situation and the near future, we might suggest that, preparing a little better for that next move to purchase. Also, you might want to go online and search for properties and community amenities. Online is a good place to start searching. Think about your lifestyle, what you're wanting your lifestyle to be. Nowadays, we're not really selling homes. We're helping people find a lifestyle that they want to kind of stay in. Decide how much you can afford, and obviously get pre-approved. And that helps. We'll work here to guide as well as Mr. Barbosa. Decide the price that you want to stay. Just because you might be affording you might be able to qualify for $1 million home, doesn't mean you have to stay in that price, right? You can move down. You want to wherever you want to choose to stay, so you can stay comfortable with your payment, the type of home, location, all the features you desire. And of course, once we help you find that home, we'll guide you through, inspections and the closing process. So one of the things is key here is, where do you want to live? Of course, are there any special incentives you might want to consider? Tax breaks, areas that might offer tax breaks, or government programs. You want to be in the area where friends and family are close, where you usually stick around. Also, a lot of people might find things like parks, like dog parks might be important for their best friends, or entertainment, schools, safety, of course, distance from the workplace. So just some info on the Fair Housing Act. You have some rights to be, it's like a state and federal statute that everybody should be treated equal. So one of the most important things a lot of first-time home buyers don't realize when working with realtors is that realtors are licensed salespersons. But not only that, they are part of what they call like in this case, the local real association, which is the San Antonio Board of Realtors. We have the state also, and the National Association of Realtors, which in that case is we're part of an association that we're held accountable, and we're sworn to the code of ethics. And to hold those true when we're working with the consumers and the public. So we'll help you find, like I said, a lifestyle home, and not just we're looking for homes. We're looking more of a lifestyle nowadays. We help buyers and sellers understand the current market condition, as I mentioned. We provide the up-to-date information on disclosures and protection. We protect your interests. So it helps. We help you understand and determining the buying power when it comes to seeing what kind of market conditions might be out there. Like in this case, right now you might be able to have a I would say a leg up on just the whole market. The inventory right now is a little high versus have you guys heard of seller's market versus buyer's market? And that just means that a buyer's market, there's more inventory than buyers out there, so you might be able to negotiate easier knowing that there's more inventory to choose from versus there's a lot more buyers out there and not enough inventory. That's called the seller's market, so the seller kind of has a leg up on the negotiating. So we'll be able to kind of guide you to determine the buying power, what times when it's kind of cyclical when it comes to buying the trends of the homes sold. You'll find that starting in the beginning of November, things start slowing down. People aren't looking. The holidays start coming in, so they're not looking at getting to a new home or looking for a new home yet. But you'll start noticing that towards, I guess, the second week of January, that is when it starts picking up again. So that might, that info might help you know when to come in and purchase a home. We help as realtors also help you determine the condition and the value of the property. We negotiate for you on behalf of you through the terms of the transaction. And of course, we guide you through the closing process. So fiduciary duty, that's what, we kind of establish an agency relationship with you. And fiduciary duty just basically means that we have the utmost care, integrity, honesty, and loyalty when it comes to dealing with you and your purchase. Elements of a purchase offer. We'll see that we'll start off with the earnest money, which is a deposit. A lot of people think earnest money is a down payment or something like that, but it's more of a deposit that you put as consideration to show that you're a serious buyer. Escrow period. The escrow period, which is the time that you come to an agreement and you put that contract into escrow, and then in the time it takes for you to actually get your keys and close on the home, it'll take around 30 to 45 days. Typically, the down payment amount, you're looking at least 3.5%. I know Mr. Barbosa has some programs that might do less down payment. He'll go over some of those options. And then we'll disclosures, of course, to ask for as a condition of your purchase. So how to get your offer accepted? That's always good to know. Using a realtor is key, of course. We know the ins and outs of the market, and we'll be able to advise you on the best ways to get your offer accepted. Of course, being able to have that financing pre-approval through, in this case, Vision Mortgage, he'll be able to guide you on basically having that pre-approval letter, and that's basically like showing the proof of funds when it comes to submitting an offer. That shows that letter is kind of showing that you have the cash to be able to buy a home. Of course, doing a properly written offer is always key on what you what the conditions are on the home, and then successful negotiation, and then offer acceptance. Escrow and closing process. So to have, I'm sure a lot of you might have heard of the title company. This is what we call the escrow company. They're basically third party. They're a neutral third party in the transaction, and they're basically custodians of the transaction documents, which is like the earnest money. They'll go ahead and hold on to the contract, make sure everybody's following the terms of the contract. If there's any amendments or changes to the contract, then we'll go ahead and submit those changes to them, and they'll make changes to the contract. So they're basically just a neutral third party. And then of course they handle the loan documents and closing instructions by the lender, and the title insurance. They provide title insurance, make sure your title is a clear title. So it's always good to be able to be guided through professionals that know who to kind of how to do the whole closing process. So inspection. So for your protection, get a home inspection. That's something we hold close to our hearts. We know that when you're purchasing a home, you want to get it inspected, and that's something that might come into play later on when you're trying to negotiate. I always say, okay, we might be able to get the offer in, as you might not be too happy about. We might be able to not come to what the terms that you want, but more leaning towards the seller side. We'll go ahead and I would say wait till the option period and do your inspection, and we'll go ahead and then be able to negotiate a little lower because of the condition of the home. Also, there's different types of inspections. One of the ones is like termite inspection. It's usually for VA. That is needed. Of course, you can always get it. It doesn't have to be a VA loan. And then, of course, the physical condition of the property, things like AC, the chimney, the plumbing, all of that. And this helps you reduce the unexpected failures in the home system. And then you'll be able to negotiate if you want a home warranty to be able to cover things like, when let's say the water heater breaks down, the AC breaks down. We negotiate a home warranty that the seller can provide. So one of the things the last thing we'll talk about is 10 mistakes first-time home buyers make. They might not consider renting as a better financial decision. A lot of them are, I really want to buy now, but we'll go over your application and kind of analyze the situation you're in right now, and say, hey, you're ready to buy, or you might want to consider renting a little longer and showing that rental history maybe, or depending on the situation. They're not prepared. The second thing, first-time home buyers make mistakes on is they're not prepared to compete in an all-cash market. They might not be pre-qualified, not have that pre-approval letter, and other people might be having cash. So who the seller is gonna consider a little better is the offer is someone that has basically the cash with them. But having that pre-qual letter from people like Mr. Barbosa that can help you get one with Vision Mortgage, they having that pre-qual letter is basically like having cash and showing that you're a serious buyer. Another thing they do, it's kind of they put the car or extravagant spending behavior before a home. You might want to consider during the purchasing stage, when you're looking to buy a home, is lay off on buying all, going out there and buying dinner for everybody and, maxing out your credit cards. I had a situation where I had a buyer pre-qualified with Vision Mortgage. They were ready to go. We looked at, a lot of homes. We were shopping around, and we finally came to this beautiful home. They were really excited about making an offer, and we said, okay, we decided to go take a look at it the weekend, so the family can come along. And then they show up with a brand new car, and that's when I kind of realized, I got kind of scared. I said, okay, I hope they didn't just buy a new car. So they come and I say, hey, that's a really nice car. And I came to the conclusion they had just gone those few days to buy a brand new car, kind of threw off their debt to income ratio. So now they had a little more debt. So I always recommend, if you're looking to buy a home, don't touch your credit. Let us kind of guide you through it, and say, okay, maybe after you're ready, you've purchased your home and you have your keys, you can go and buy dinner on yourself and max out your credit card. I'm just kidding, but so that's one big thing that I've personally experienced. Also, they put too much faith in online loan information. People go online, they think they start looking at all this, information online. It's people don't realize the internet is not regulated. It's not, they don't regulate the internet. So don't take it as gospel. There's good information out there. Just be careful with your source. They put too much faith in online home values. They go out there to places like Zillow, and they see, this house, they're asking $300,000, right? But on Zillow it says it's only worth $200,000. And I say, okay, well, let's look at the actual market conditions and see what's have sold around there. Because Zillow will say, it's $200,000, but it can be worth from $100,000 to $300,000, and it's like, well, that doesn't really give you an idea. So that's one of the things that I don't put too much faith in the online home values. They skip the home inspection. I always find it hard to skip. I never recommend it. I always say, for your protection, get a home inspection. That's one of the biggest things I gotta mention. That can help us negotiate later on through the transaction and get to better terms for yourself. Also, they forget to check the wrong emotions at the door. We've had situations where the wife or the husband, they're really excited about the house, and they go through the door and they say, I really want this house. I have to have this house. And they don't realize that, you got to have that kind of emotion, the right emotions, and go into a home and say, okay, I really like this house, but if it's not this house, you can find another one. So emotions are a big time factor when purchasing a home. They expect their home's values to appreciate over time. That's not always a given, right? Back in 2008, 2009 time. So also they underestimate the cost of needed repairs sometimes. They say, oh no, we can buy this house. I'll put in, brand new AC unit, doesn't matter, or a brand new fence. And then they realize, hey, it's going to be a little more than we thought. And then one of the last ones is they are unwilling to make compromises on price, size, or condition of the home. So when you're purchasing a home, there might be a better situation, a better option than what you're set your mind to. So always be open-minded when purchasing a home, and be open to do some compromising. So that's it for my part of the presentation. I'll be more than happy to answer any questions afterwards. I'm going to go ahead and introduce Mr. Barbosa from Vision Mortgage. He's going to go over the lending side, the mortgage side.
Vision Mortgage Company is celebrating its 20th year. We've been right here in this building for the last 20 years. So we're available and able to process loans of all types. Okay, so why are you here? What's my part to do? And my part's called Show Me the Money. Show me the money. How do we get the money to buy your dream home? There's lots of different programs out in the marketplace now. There's Fannie Mae, HUD, VA. Anybody here a veteran? No? Okay, so VA, USDA programs with no money down. These are all programs that are out there and available to help you. In addition to these programs, there's first-time homebuyer programs that allow for housing assistance. There's housing assistance programs through the city, for example, the HIP program, where they'll lend you up to $15,000 or give you up to $15,000 worth of closing costs and down payment assistance. So those are available. The most popular program that we have is the FHA program. The FHA program allows a 3.5% down payment. If you follow along on that little screen. And there's some differences that I'll try to point out as we go along. The FHA, the conventional, and since no one's a veteran, we'll skip over the VA. But under the FHA, the minimum down payment is 3.5%. There's something called MIP insurance, and that's mortgage insurance premium. A mortgage insurance premium and under FHA is an insurance that protects the investor who's making this loan with very, very little down, protects them from your default. Hopefully that'll never happen. But if it does, then the investor is made whole. So that's what allows the 3.5% down payment program to exist. It's an insurance that's backed by the federal government, insured by the federal government. It is for the life of the loan, and that's pretty important because another program I'm going to discuss in a minute allows for not life of loan. You can actually reduce or eliminate or get rid of your mortgage insurance. You pay the insurance one time, and if you notice on this $100,000 example, and the $100,000 example is going to be throughout all of the different pages that we go through, $100,000 sales price, the upfront MIP insurance is $1,688, and then there's also a monthly amount that's a little less than $70. Again, that's for the life of the mortgage. Under this particular program, you'll see that the investment down at the bottom is $8,400. That's the minimum investment unless the seller, and the Pequeno Real Estate Group is very good at doing this, if they negotiate up to 4% of your closing costs can be paid by the seller, closing costs and prepaid items. Well, 4% of $100,000 is $4,000. That means that this $8,400 would turn into $4,400. Okay, so that's very, very simple. But so how do you get this money under FHA? Well, first of all, you don't have to be a first-time home buyer. If you've had another FHA loan and it's still outstanding, there's some particular things we would need to talk about. But one of the things we're going to get into in just a little bit is credit and FICO scores. And credit scores are very important under FHA, down to 600 FICO score. Now, does anybody know what their FICO scores are? What your FICO score is? Okay, this is going to be one of the most important takeaways for this evening. You really need to check your FICO scores. CreditKarma.com, AnnualCreditReport.com. There's a number of different sites that allow you to do that. But you need to know so when you walk in, you know where you're going to land on this particular loan product. Again, 600, no restrictions. And the range is from 350 as a low to 850 as a high. So it's sort of in between, right in the middle, around 600, no restrictions. 580 to 600, and here's where we lose a lot of lenders. A lot of lenders won't do this type of loan program. We have availability down to 550, folks. So 580 to 600, same down payment. But now what happens is FHA says you've got to make sure that they have a rental history or a mortgage history. Now, if you have a rental history in the last 24 months, obviously it has to be good. We would send a rental verification and verify how you've made your rent payments. Because as FHA and conventional programs and all work, how you make your rent payments is typically how you'll make your house payments. So they want to make sure that that borrower has the ability to pay and has paid in the past. Now, what happens under the 580 mark? Well, from 550 to 580, we have one national lender that will allow us to do an FHA loan program with 10% down. So the 10% down payment program exists between 550 and 680. 580, excuse me, I'm sorry. 550 to 580 with 10% down. VA, as I mentioned, just is a no down payment program. The significant thing about VA is that if you've used your VA before, there's a VA funding fee that's pretty expensive. So that's one of the things that we focus on pretty quickly is, have you used your VA in the past? Fannie Mae is a conventional loan product. And the conventional loan product starts with a 620 FICO score. So now, when I keep saying FICO scores, you see how important they are in this process, because we'll be able to figure out if you can get into this type of loan program or not. This program is a 5% down payment program. So on $100,000, your down payment is $5,000. You have something called private mortgage insurance, similar to what we talked about on FHA. In this case, it's a little bit higher per month, but guess what? There's no initial amount that you have to deposit. So you don't have an initial deposit, but you do have a monthly amount. And that monthly amount is based on your FICO score. So the better your FICO score, the less the amount of the insurance. That's the significant takeaway there. So once again, real important, one of the first things we do, and we'll get to that in a second when we fill out an application, is we run the credit FICO score. We want to see what the credit's doing and make sure we're putting you in the right program. We talked about the most popular program being 3.5% down. Fannie Mae and Freddie Mac are both conventional agencies. They have a 3% down payment program. So that is, in fact, the most minimum program available other than VA. So under 3% down payment product, under 100,000, obviously that would be 3,000 down. And you're going to have your, again, mortgage insurance that's involved. The mortgage insurance is a little bit higher because you have less money down. But it does give you the ability to buy with 3% down. And once again, it's FICO score driven. Whatever the FICO scores are will drive that particular product. One of the significant things about this is gift funds are okay. So they allow gift funds from a relative. If you have a rich uncle or someone that's available to give you a gift of the down payment and or closing costs, then this program would work for you just like it would with FHA. That didn't used to be the case, and it's just basically in the last few years that we have the ability that the 3% down payment product from Fannie Mae and Freddie Mac allow you to have gift funds available. And you do not have to be a first-time home buyer for the bulk of these programs. There is one where we do have to watch what the median income is. The median income for San Antonio, for Bexar County rather, is $62,100. So if you're below that family household income, you would qualify for this 3% down payment product. Okay. So now, what is the most important step in this whole process? And that is the loan application process. So everything starts with a completed loan application. You're going to find, aside from the slides, there's going to be this particular item in here, and it's a checklist and an actual loan application. Now the residential loan applications are all the same. Everybody uses the same. That's why it's called a universal, or in this case, uniform residential loan application. Okay? So we're going to go over that in just a little bit so you can see some of the ins and outs of this product. What are we looking for? What's the mortgage guy going to look for? We're going to look for credit and rental history, how you've made your rental payments. We're going to look for income and employment, the stability of employment. If you've had, for example, FHA requires at least 1 year of employment. You have to be on the job for at least 1 year. Some require 2 years. If you're self-employed, we look at the last 2 years and see how you've been able to pay your income tax and what your net amount is from that. We look at your funds to close. In some cases, some of the programs require that you have reserves, in other words, money left after you close on the transaction. But the majority basically look at, do I have enough money on deposit to cover the down payment, the closing costs, and the prepays? Credit FICO scores. What makes up your credit FICO score? And this is extremely important because if you're shopping, as Alvaro said, you don't want to change your credit patterns, especially right before you buy. And certainly not after you buy, because we run credit reports twice. We run them up front when you walk in, and we go through the credit approval process and give you a pre-qual letter. And then the lender does it again at the back end. In other words, when the house is ready to close, the lender will run your credit report again. We don't want any big changes. We don't want to, oh, got a new car payment, or, well, we got all the, I had a couple that bought all the furniture for their new home. Unfortunately, they did it before we closed. And so the lender pulls a credit report and they see a $5,000 Jory's bill, or I think it was Jory's furniture. And so now a new payment, and then they didn't qualify. Well, guess what? In order to qualify, they had to take all that furniture back. I'm sure it's in their house now, but at the time, it had to go back. FICO scores. 30% of your FICO scores are based on your available credit. What credit you have available on your existing amounts of credit cards and open lines of credit. 10% is the number of inquiries. Anybody ever been to the mall and you walk into the mall and they say, fill out this application, we'll give you 20% off? What they're going to do when you do that is they're going to run a credit report. That's an inquiry. That's basically a consumer or a hard inquiry. They're inquiring about your credit. Now, your insurance agent might do the same thing. They may run credit report, but it's not called a hard inquiry. It's called a soft inquiry. In other words, it's not going to impact your FICO score to shop for insurance. The credit model understands that shopping is okay. You came to me and you went to another mortgage company and so on, that's fine. But if you do that 6 or 7 times over a 2-month period, it's going to impact your FICO scores. Now why? Because the model doesn't know what you're doing. It just knows that you're applying for lots of credit. And so the reason that the FICO scores are there is it measures your potential for going bankrupt. So if you logically think about it, someone that has a lot of credit cards, for example, and they've used up all their credit, you're going to have a greater potential of going bankrupt than someone that has a lot of credit and hasn't used it. Okay? 10% applies to your mortgage payments and installment loans and revolving accounts. So only 10% of that 850, well, that's 85 points, is made up of those payments. But here's the big one, payment history. 35% of your FICO score is your payment history. So if your payment history has failed in some form or fashion, that's the big one. Okay. Another thing, and then 15% with the length of time that the history of the account's been open. In some cases, the accounts are brand new and they're not going to score up. But by and large, if they've been on your credit for at least 12 months, it's going to give us a score. Those are the ins and outs of your FICO scores. We got to know those pretty quick into the process, and that's one of the first things we do. And how do we go there? How do we get that information? We do it off of the residential loan application. What you have in front of you, it's very simple. The top portion, you don't have to worry about very much. This is something that we fill out, but you do have to sign it, so don't forget to sign the application. The middle portion, this is the important part. Here's where you have to make sure that you read carefully. The borrower, that's either husband or wife, depends on who wants to be the borrower. But typically the husband goes there, the wife goes there, and then you have your social security numbers, you have your home numbers and contact information, dates of birth, are you married, unmarried, or separated? In Texas, there's no legal separation, so you're either married or unmarried. Then where you've lived, because what's going to happen is the credit agency is going to take that information and they're going to look at the last 7 to 8 years worth of credit history. And they're going to make sure they post all your addresses, where you've lived, and so on. If you have a new address, that'll now appear. So they'll go back and they'll give us that history based on the credit report. This next section is sort of like a little business. On this side, you have everything that you own. On this side, you have everything that you owe on what you own. So here, for example, you'd have on the left-hand side of the application, you'd have your banks where you have your money. You're going to have your 401k. You'll have your life insurance policy that's got cash value, vested interest in a retirement fund, automobiles, furniture and personal property. So that's all your stuff. Everything that you have is on the left-hand side. Now on this side, hey, there's a car payment. I owe Ward's, or Sears rather. I have accounts with MasterCard, Visa, and so on. Those go on this side. Now, all that's going to flood in from the credit report. The credit report is going to automatically give us that information. But there are some certain times, for example, down here, alimony and child support. We won't know that off the credit report unless you haven't made your payments. Then it shows up. But alimony and child support, we need to know that. We don't want to get a surprise at the back end and figure out that there's an extra expense going there. This is, if you own real estate currently, that section would have the information about that piece of real estate. Here is a very, very important part of your application process, and it's called the declarations. Under the declarations section, what we're doing is we're looking for whether you have the ability to take title to a property without any issues. So what you're looking for there is judgments and bankruptcies, and do you owe anybody? Is anyone suing you? Are you suing anyone? Anything that would stop you from the ability to get a clear title. You have to check off. Hopefully those are no answers all the way down. And then, of course, are you a citizen or not? What category do you fall into? Have you ever had a bankruptcy? Do you owe the government any money? Okay. Have you paid your student loans? Things of this nature. That would all appear here. The acknowledgement and agreement, people pass over this too easily. We really need, you see all the fine print, it needs to be read. You need to make sure you understand what you're swearing to by signing your name down here. So be sure not to perjure yourself. You want to make sure that all the information is as true and correct as possible. And that's what that section's about. Read it carefully before you sign. The last section talks about really just your ethnicity and things of this nature. It's government monitoring. It's voluntary. If you don't put it in, the loan officer is bound to put it in for you. The attached page, or the pages with that, is called a checklist. And that's all the stuff we need in order to get your loan approved. If we don't have it, then you're not going to get a full approval. You'll get, okay, well, it's missing this or missing that. That weakens your position when you're making an offer, because on the loan offer, on the pre-qual page that I submit to the realtor, when the Pequeño Group sends in your contract, they're going to send in a pre-qual page. And I have to say that I looked at your credit report, and I looked at your FICO scores, and I've looked at your income. Well, how can I do that if you haven't given me your W-2s and pay stubs and bank statements and things like that? So I have to see that so I can say yes to all that. And then once I've had that, then you have a really strong offer. In fact, it turns your contract into a cash offer, if you think about it. You're no longer doing financing. You're going to offer the seller cash once the deal goes through, once the loan program goes through. So that's how you compete with the 20% that are buying cash, by you becoming a cash buyer yourself by giving all the information that the lender needs. And this is not just us, guys. It's everybody. Everybody will ask you for the same information in some form or fashion. I put it all on one page. W-2s, tax forms, pay stubs. If you're self-employed, the last 2 years worth of tax returns. I'll need a year-to-date profit and loss statement and a balance sheet. It doesn't have to be fancy. It doesn't have to be done by a CPA. It just has to be done. We can show you how to do that. Bank or asset statements, we look for the last, it says 90 days, but now we've gone to 60 days. So we need 2 months worth of bank statements. Now, why do we need 2 months worth of bank statements? Because we need to show, remember we talked about the funds that you have to have in down payment? You have to put so much money down. We have to show that those monies are available in your bank account, ready to close on your transaction. So it's a logical process, but it can't be in somebody else's account. It has to be in your account with your complete control over it. If you're getting a gift, the gift has to be transferred to that account. And we have to source the gift. We have to say, Mom gave it to me, and here's a gift letter from Mom. So that we have everything covered in the file for the underwriter to review. And then insurance, for example, we'll need to make sure that we have proper insurance on the property, so you need to find an insurance agent that'll cover you. We can help with that if you need it. There's also credit authorization. You're giving us permission to run your credit. Everyone should ask you for your permission to do that. And let me tell you, everyone should give you a copy of your credit report. It used to be that we couldn't do that. We weren't supposed to do that. It's completely opposite now. We have to give you a copy of your credit report. You should walk out with it. You're paying for it. You should get it. And then just the contact information for us. So, with all that, we'll open it for questions. Alvaro's available. I'm available if you have any questions.